Trading without order flow is the biggest scam I've ever seen. I want you to imagine this. If you come into a support and resistance zone and you look for a candle break just to take a confirmation long, you've already lost. And the reason why is because you're buying without seeing the buyers in control. Now, if you come into a resistance and you see a candle break to the downside and you look for a sell, again, you're scamming yourself because you don't understand why the market moves down. And so in this video, I'm going to uncover this entire scam and explain to you from start to finish the three things that you're missing. So you're missing the bid, you're missing the ask, and you're missing the delta. These are three things which are guaranteed in a three-step system to keep you on the charts for 60 minutes with enough skill and competence to replace your income in the next 3 to 6 months. And it all starts with this 20-minute video. So the story I want you to buy into is the fact that the markets aren't rigged against you. You aren't even rigged against yourself. You are rigged against incorrect knowledge. And so in this video, I'm going to wipe that all away. You will enter trades with so much precision, you will question your previous life's existence. You will enter the markets with so much confidence, you will question every YouTube video you've watched before this. You will enter the markets with so much confidence that you will keep watching this video over and over and over again. And so my goal by the end of this video is to sell you on the fact that order flow is the missing piece between where you are now and where you want to get to. And with that being said, take a notepad and pen and I'll see you on the inside. Okay, so what's up? So in this video, I'm going to be going over my 4-pillar approach and then my 3-step process on the lower time frames to master execution. So as you've seen, I want to take traders on an interesting journey or a story, right? I want every trader to understand that catching these kinds of moves does have an actual process, right? So in this video, I'm going to be going over my 4-step process to mastering higher time frame bias, and then my 3-step process to understanding where to trade from, what to look for, and why you're looking for it. Now, I typically start my analysis on the 15-minute time frame. And so just to kind of clarify, this was a short that I took on Wednesday, the 11th of February. But from a 15-minute time frame perspective, I want to introduce traders to this flow chart, which I created recently. So I call it the 15-minute power hour. And the 15-minute power hour is basically I trade for 60 minutes per day, and I only use a 15-minute time frame to validate my levels. And so this is how I look for things, right? So we're going to be referring to this flow chart throughout the rest of the video. And if you want a copy of it, just feel free to comment in the comments, and I will send you over a free link to where you can access this flow chart. But when we're looking at the flow chart here in terms of what I look for on the 15-minute time frame, on the 15-minute time frame, structure can either be bullish or bearish. And so we start off with basic market structure, right? What is the market structure? Are we bullish or are we bearish? Now, for this particular trade, we were actually bearish, and I'm going to explain why the structure was bearish right now. So if we just take a look at the market structure, right, let's zoom all the way out on the 15-minute time frame, right? So this is my very basic market structure I have on the 15-minute time frame, right? So one common question I get is, how far do I go back when I look at my market structure? And so to break this down, I'm actually going to do it on a separate chart, naked chart. This is the S&P 500 on the 15-minute time frame. And so my market structure will look something like this, right? So we have a structural high, structural low, right? And then from here, for me, I would just mark up a high like this. There is some internal highs and lows here, but just for the sake of this video, I'm going to speed it up a little bit. So yes, we have a break over here. This is a structural high, right? So there's a structural high, I guess. There's a structural low. And then we have another break over here, right? So here is our break there, right? And now we have a break down here, right? There's our break. Okay, so just to speed things up a little bit, on the 15-minute time frame, I'm interested in structural lows, structural highs, structural lows, structural highs, and then from here, structural lows, right? So this is the current market structure we're dealing in. This is the sentiment, right? So having a basic understanding of market structure will give you an edge over all the other traders because you want to know whether you're in premium or discount for your particular range. So how do I do this? So from here, when we have a structural low over here, this is our structural low, right, from here. So here's a structural high, here's a structural low. So when we go back to our friend over here, what is next? So what is the 15-minute market structure? So we are bearish. And the reason we're bearish is because we've had a break of the low. So this is our bearish market structure, right? That is kind of step one. Now, step two is have you got a clear dealing range? So what do I mean by dealing range? So if you watched any of my previous videos, you will know that I refer to dealing range as the most recent high, so that's going to be up here, and the most recent low. That's down here. Now, of course, you need to have your market structure correct and valid in order to make your dealing range correct, right? If your structure is off, you're going to have a difficult time finding your dealing range. So this is our dealing range. So I'm just going to mark this up as well. So your dealing range is basically this high down to this low. Now, it's important to understand anything inside is internal structure, right? Anything outside, so the actual high and low, is your external structure. Now, me as a trader, I don't focus too much on internal structure. This is where traders often go wrong. They try to mark up every single high, every single low, and they miss the concept of trading at key levels, which is something we're going to get onto later on in the video. Now, once we have our dealing range, so we have a clear dealing range, yes. Is price in a premium, right? So let's try and understand now what a premium is, right? So a premium is essentially the idea of selling high and buying low. Now, how do we do that once we have our structure and dealing range? Well, we have our market structure high and our market structure low, right? So we just project the fib from the high down to the low. Now, once we've established this in terms of our premium and discount, what we're now looking for is this. We are looking for, of course, this 50% area. Anything above translates into a premium. Anything below translates into a discount. And so when it comes to choosing our key levels, it's important to understand, as my flowchart says over here, is price in a premium for the structural dealing range? So the short was here. So yes, we were above the 50%. We were in a premium, right? Because we were above that 50%. Now, once we have that 50%, the next thing we're looking for is price at an absorption level for the week, right? In other words, absorption level for the week is just a key level, right? So this is where a lot of traders go wrong, right? So a lot of traders, they don't follow this process. And the times when they do follow the process, they often get messed up at this point, right? This is where all the traders get messed up. And the sad thing about this is if you mess up this point over here, so if price is not at an absorption level for the week, it means your trade is not valid, but a lot of people try and go short anyway, right? So if price is not at if price is not at an absorption level for the week, it's no, you don't trade, right? So this is the basic logic. So if we go back to my chart on ES, where I've got my key levels defined, these are absorption levels, right? So sometimes I call them key levels, but I want to move away from calling them key levels. I want to call them areas of absorption. Now, there are ways you can find these areas of absorption, right? So all these here are areas of absorption, right? Because what that means, I mean, we're going to talk about this later on in the video. What that means is that we see a lot of absorption here. So sellers were in control, or passive sellers. Sellers were in control here, passive sellers. Sellers were in control here, passive sellers, and that's what results in the lower prices, right? This is what results in the lower prices, okay? So this is an absorption area. So going into the trade for this week, we actually did tag into an absorption area, right? So these here are absorption areas. So 1, 2, 3, and then I guess 4 as well, right? So there are some reasons why this trade was valid. So we're looking to enter off these absorption areas. And so just to make things clear for traders to understand is I want you to start building a narrative before you go into the markets, right? So every trade you take needs to follow a narrative, right? So what do I mean by narrative, right? So if we go back to our naked chart over here, what we've seen over here is we see bearish market structure. So that's kind of step one, right? We now have an established dealing range, this high down to this low, right? So this is dealing range. Sorry, this is step 2, our dealing range, right? So we have bearish market structure, we have a clear dealing range, right? Tick. Now, if we didn't have a clear dealing range, let's say if price was just melting, and we didn't have this sharp pullback like we do here, then this would not be classed as a dealing range, and in that case, we wait, right? If you don't have a clear dealing range, no, you don't trade. But if you do, because for this particular scenario, we had a clear dealing range, right? So this was number 2. Now, number 3, or step 3, was, is price in a premium? So what we can see here, price has given us structure high, structure low, and we've eventually retested ourselves back into the premium, right? Which is above the 50% area. Now, when we're above the 50% area, what this means or what this represents to us is that we're in a premium, right? This is the narrative that you want to be building. So I strongly recommend traders follow if-then statements. Traders have a flow chart in place that they can understand, right? And then this process here then allows you to find the premium. So for example, this is the premium. And then of course we have a key level resting over here, right? So this is step 4. Now, so the mistake that I see traders make is they try to jump into trades without having the narrative in place, right? So the narrative comes down to this flow chart over here, right? Your narrative simply comes down to how well you can read markets, right? Very important to understand that. How well do you read markets? How well do you understand the story? So let's break this one down. So the 4 pillars to crack daily bias in less than 5 minutes per day, right? So quickly, we're going to go over the learning objective. So developing a 4-step framework to getting the daily bias right with as little screen time as possible, right? That's what you need to do. It takes me 5 minutes a day to find my daily bias, right? Understand how to use the power of 3 indicator, right, to position yourself in the markets, and master the fib tool to determine whether you're in premium or discount. So the only thing we haven't been through is this over here, right? We haven't been through the power of 3. So we're going to quickly understand how this power of 3 actually works. And so if we just take a look at the ES short that I took, right? Now, one thing to understand is most traders should understand how a weekly candle forms, right? Every trader should understand how a weekly candle forms. So if we are looking to short, right? If we are looking to short of one of these absorption levels, right? Let's say price comes in, tags into our zone, and we're looking to short. Now, this is what's interesting. Can we all see this? This is the weekly candle, right? This here is the weekly candle. So this is the weekly opening price right here. Now, for those who don't understand how a wick works or how a weekly wick forms, if we're entering here when the wick is this big and we're looking to go short, right? We're looking to go short. Can you see how the wick increases in value, right? Increases in size. So the wick at 2 is greater than the wick at 1. And so the whole point here is to really understand you want to be positioning yourself inside of a higher time frame wick, right? So having key levels is good, having structure is good, having premium and discount is good, but you need to put it into a system so it actually works for you in the long term, right? Here is your basic system. And so when we go back now to the learning objectives, right? So develop that 4-step process using the 15-minute power hour strategy, understanding how the power of 3 works, and then mastering the fib tool, which is basically the premium and discount. So mastering daily direction comes down to a repeatable process and nothing else. So if you lack a repeatable process, I want you to basically invest in downloading this. So I'm going to put a link in the comments. Feel free to download this, right? So structure, dealing range, PD arrays, absorption level, and then go short, right? Same vice versa for a long. So taking trades like this, again, you can see the weekly candle being big, the wick being small, and then the wick getting bigger. So your job as a trader is to position yourself inside of a higher time frame wick so that you can catch this expansion or these expansions. Right, so again, basic questions that I ask myself going into the markets, because I'm not looking for a trade. I'm looking to read the stories and the clues that the market gives me. So basic questions I like to ask myself, right? Where is price relative to the weekly opening price? So if I wanted to go short at this level or this level, we are above the weekly opening price. Hopefully traders can see this, right? If we're looking to go short here, we want to be shorting in what we call a bullish weekly candle. Because when we short in a bullish weekly candle, yes, in premium, yes, with the correct levels, we end up getting the result we want. And so the result that we want comes down to positioning of the weekly candle, right? That's the first thing. Is price above or below the 50% of the range? And so 50% of the range just comes down to what we discussed over here. So what we can see here from a structural perspective, we have structural high, structural low. We are above the 50% area, so we are in a premium, right? Again, using our structural tool. Now, the final thing we want to ask ourselves is price at an area of supply and demand, right? So supply and demand isn't a fair value gap. Supply and demand is not some random line that you draw. Supply and demand comes from specific fair value gap areas that have absorption, right? I've explained this many times. The reason you don't get it is because you haven't put in the chart time or the work to understand where these absorption areas are. It takes chart time, it takes practice, it takes screen time, it takes getting it wrong before you get it right, and you'll still get it wrong as you're getting it right, right? So this is just a basic summary of what's going on. So the first pillar is market structure. These are the highs and lows. Then from there we have our dealing range. Then from there we understand premium and discount. So these are premium absorption areas, these are discount absorption areas. And then of course finding the key level. So no key level, no trade, right? That I work very heavily on that principle. So once we have our market structure, we're bearish, we have a bearish dealing range, we're in the premium, we have an absorption area, and then we go short only at one of these key levels over here, right? So this is how I build a story when it comes to taking trades. So when it comes to trading on the lower time frames, I'm typically using a 3-step model. I call it the triple X model, and it allows me to read the story of the price in only 3 simple tools, right? So the only 3 tools you need ever. So we're going to be going over the basics before I go to the charts. And so on the 15-minute time frame, I'm looking for a 15-minute range break with a key level. So the reason why I call it a range break is because I don't want traders to confuse this with the orb, right? So this is not the orb, right? It looks like the orb, but it's not actually the orb. Now, the reason it's not the orb is because I see a lot of traders, typically what they do is they will focus on only the orb, right? So what this means is they will try to enter, right, based off a break, right? They'll try to enter based off a breakout. Now, this is not completely correct, right? So if you're a breakout trader and you're struggling with basic direction, or you're struggling to get a good read on the market, right? So you got to have your absorption levels, right? So I spoke about this previously in the video. You need to have your absorption levels in place before you take an orb strategy. Now, what you're typically looking for is a break and retest, right? This is what you're looking for. So your orb, which is over here, right? This is only your second confirmation. So first you're looking for a key level, then you're looking for an opening range breakout or an orb, and then you're looking for absorption. These are the 3 steps that I follow. So you got to have your key level, you got to have your opening range breakout, and then you want to confirm everything with the order flow. It's very important you get these steps correct, right? It's super important you get these steps correct, right? In this order. So you need to have a key level first, then you wait for a range break, and then you look for absorption. So step 1 is a key level, right? That's the first thing you're looking for. So until we tag into one of these levels over here, so 1, 2, right? I'm not looking to trade. I don't trade any of this. It doesn't matter what the orb is doing, right? I do not trade where there's not a key level. So I'm looking for a break and retest to go short, or a break and retest to go long, or a break and retest here to go short, right? I can only trade at my levels, and I see so many traders trading without levels, and it just freaks me out because you don't know where the market actually wants to trade from. So it's kind of like trading blind. So even if you look at my pre-market plan for that day, right? So I have my key levels in place. So 1, 2, 3. If we look at this from a volume chart perspective, we have our POC down here, right? Point of control. And so what we mean by point of control, it is the area on the chart from the previous day which had the most amount of volume transacted. So in other words, we want to be trading where, or we want to be targeting areas where the market has high volume, right? High volume refers to high interest. Now, once you have that in place, you can start to understand what's going on here. So this was sort of the orb setup. Now, when we look at this from a basic candle perspective, we're looking for a break and retest. So how does the break and retest form? So a break and retest forms like this. So step 1, we have a key level. Step 2 is we're confirming the key level with the opening range breakout. And so if you're a breakout trader, right, what you want to understand, if you're a 15-minute breakout trader, this is the low, right, and this is where it gets broken. We don't look to enter here, right? We look to enter at our key level to go long or short, right? That is the main distinction I want you to understand and take away from this video if you took nothing else. You need to have your key levels. In fact, what I've done here in the Discord is I've given you a bullish and a bearish cheat sheet, right? So we're going to be focusing on this first. So do you see price hitting an absorption area for the week, right? So this is an absorption area. These are our key levels. So do you see price hitting an absorption area? No, no trade, find the absorption area, right? So in other words, if you don't see an absorption area, you do not take a trade and you go back and you find where the absorption areas are. Now, assuming you know where the absorption areas are, you go, yes, has price tapped into that absorption area, right? No, wait for price to hit the absorption area, right? Yes, right? Has price broken the low between 9:30 and 9:45, right? That is your Eastern, that is your 15-minute orb, basically. Has price broken the low? Right, so in this case, we have broken the low, so that's tick, right? So we can now move on to the third step, right? No, find the absorption area. Yes, has price retested the absorption area, right? So what we're looking for is a break and retest. So notice how I'm building a story in price. I'm not just looking to trade any random break, any random sweep, any random fair value gap, right? Your trading needs to have frameworks and directions to them. Having a flow charts like this definitely helps. So once you have your key levels like this 1 and 2, you're looking for a retest into the actual zone. And so the retest looks something like this. So what we can see is we have a break below our zone, and I mark out this candle over here. This is a break candle here. Now, once you have that break candle, you're looking for a retest into the zone. There is your retest, and you're only allowed to go short as we go past the retest candle, right? But we want to understand what was going on here, right? So how do we determine that? So we determine that by looking at these charts over here. So here we have the same chart, here we have the same retest area, right? So we have break and retest, and we want to understand what is going on inside of that level, right? So I have broken this down many times, and I'm going to continue to break it down on every video so you can understand the basics of footprint charts, because the basics of footprint charts are so basic that if you can understand it, you can win in the long term. And so the basics of footprint charts are very simple, right? You have a bid and an ask, right? You have the bid, which is the left-hand number, and you have the ask, which is the right-hand number. Now, here we can see a large amount of aggressive buying compared to aggressive selling because the delta is blue. Now, when the delta is blue, right, so that's going to correspond to this wick here, this one, and this one. If this delta is blue, and we see price breaking below the key level, right? So we see price giving us a bearish break, then a retest. We can go short here. We can have our stops just above this wick. Now, what gives us confidence to place our stops here, right? And we just want to be targeting minimum the level down here, right? But of course, we had a pretty monstrous short, right? So again, I had my 3 key levels down here. We want to be targeting the local key levels down here, right? It's just like that. So this is the short that actually played out. But what we want to focus on is the break and retest model, right? So the break and retest model is break, retest, and then go short like this, right? So we want to know what's going on here, and then we want to know what's going on here. In order for us to understand that, we will have to go to footprint charts. And we want to understand that if we have a lot of aggressive buying over here, right? We see buy orders trying to drive price up, right? That is what's going on. So let's take this to the right-hand side. So what's going on here is we can see a lot of heavy buying activity, right? But the market struggled to break above this area. The market broke lower. And so when we see blue delta, but the market breaks lower, this is the market rejecting buyers. So in other words, what's really happening here is, think of it this way. We see here a lot of the market buyers pushing up, pushing up, pushing up, pushing up, but instead they meet what we call passive sellers, right? PS, passive sellers. Now, these passive sellers are responsible for driving price down as they absorb these aggressive buyers, right? So I've made a lot of videos on footprint charts, so I don't want to make this a footprint chart video. This is more of an overall process video. And this was sort of the 3-step process that I use, right? I use this process every single day to trade. Now, as you can see here, just to play price on a little bit more, right? What we can understand is we have bearish structure, we're in premium, right? So we have our rejection areas over here in premium, and Thursday we had a huge sell-off. So once you have your absorption areas here and here, these are absorption levels, these are absorption levels. Once you have your absorption levels, it becomes easier for you to time the actual entry, right? You can time the actual entry because you actually understand where to take a trade from in the first place. So this is sort of your 3 steps. You're looking for a key level, a 15-minute range break, and then a break and retest to go short, right? So here we have a tag into our first key level, right? Then we have our 15-minute, we wait for the 15-minute to form, and then we use order flow in these regions to see a rejection here and a rejection here. So here again, we can see again, once again, we can see a lot of this positive or blue delta, right? Aggressive buying, right? And no reward. Even over here, aggressive buying and no reward. So we're seeing the buyers not being rewarded. They're being rejected. They've been absorbed by the aggressive sellers, right? And so this is the final sort of thing I want to kind of leave traders on, right? If you're struggling to trade New York session, I want you to use this framework I've made, right? So I call it mastering the New York session, right? So does price hit a key level? Yes. Does price break a 15-minute high or low, right? So again, let's go here. So no, sorry. So does price hit a key level? Yes. Does price break a 15-minute low? Yes. Do you see more aggressive buyers and sellers? Yes. Does price break below the level? Yes. Short, right? So that's what you're seeing over here. So you're seeing tag into a key level, break below the 15-minute range, aggressive buyers failed, go short, right? That's essentially how the break and retest works, right? So this is the break, right? This is the retest, and there is your entry. Now we're looking for break, retest, entry, right? And the only way you can confirm that is by using the chart you see in front of you. I make all my videos centered around processes and order flow, and it's important to understand you want to get your process down, get your key levels, and confirm everything with the order flow.